We've gotten a lot of questions about our signals. We do have just in every newsletter, we have something that says, basically want to learn more about our signals, and it's got tons of resources in there, and you can kind of choose your own adventure. But I'm going to kind of walk through one of the reasons that I led into signals is I want to talk a little bit about them and how you might use them for different strategies. And we can kind of just like walk through them one by one. We have the long-term signals. And the long-term signals at the top, just to go through them, are market similarity, upside breakout, downside breakout, profitability, and growth. And if you're just looking at pure long-term, you obviously want to start with that. And a very simple rule we actually say for any long investment is that we want upside breakout to be greater than downside breakout. Now, what do those metrics mean? Obviously, that's pretty broad, and that's, upside breakout especially, we back tested, and even before our live testing, that beat the S&P 500 80% of the days that we tested it, a basket of those high upside breakout stocks. And really the easiest way to think of that metric is we're looking for a lot of bull bets in the long-term options markets, a lot of analysts that like the stock, have price targets above where it's trading, analysts, recs on buy, upgrades for the stock, and then momentum factors. Everything from, the 52-week change to, something like RSI or something like MACD, which are, kind of statistical analyses on what, kind of movements perform well with the stock, something like an exponential moving average. And that's basically tracking statistical analysis of price factors that traditionally move the stock. And it's a really easy way to understand how you would get an upside breakout, because you have to have basically these positive options dynamics. You have to have analysts liking you, and you have to have the momentum factors. And it's pretty easy from that way to see how it works. Downside breakout is very similar, except we're looking more at the bets against the stock instead, and obviously bad analyst coverage and bad price momentum. Then profitability is just looking at like an EPS forecast, and we do our own ways of like forecasting that on top of the analyst recs, similar to growth and kind of the increase in the sales of that business. Market similarity is really just looking at how similar it is to the S&P 500. So you get a 100, it means the stock has performed pretty similar, and we expect it to perform similarly to the S&P 500 going forward. Before we move to short-term signals, I also think that a lot of people that use our signals like to use the short-term ones for long-term. So a good example of how to do that would be like, you might like a stock long-term. It might have positive stock momentum, but if you see basically that it has low net option sentiment or low net social sentiment, those are the two ones we recommend most, or low net institutional flow, then you might say, well, I like this stock, but there might be a better time to buy it. Versus if you see those short-term signals really going way up, then you would definitely say, oh, now might be my best time to buy it. So we kind of go through some of those themes. And if you're talking about shorts, you can pretty much just reverse anything I said there for like longs and what you'd look for. So, for a long, you want a high upside breakout, low downside breakout, high profitability, high growth. And the number that we look for there is like above 120 or 130 for profitability plus growth, if you're going to invest with that as your primary thesis, even if you have kind of lower upside breakout, but you still want that to be greater than downside breakout. And then, you want not only good net option sentiment and net social sentiment, if you might want to like time the buying of your longs better. And you want to see positive trending in that as well. Now, in terms of looking at things for short-term investments, we have net option sentiment, which is very similar to upside breakout and downside breakout, except it is only looking at options, and we're only looking at if the bets are more in the positive or the negative direction, especially in terms of how those options are being priced. Because it's very hard there's a lot of retail investors could buy contracts or options contracts, but it really is the institutions that decide how they're priced. And if they're pricing them at higher prices, say if there's a call that's trading 10%, that would strike as like 10% above where the stock is trading, and a put where 10% is below the stock is trading, if those calls are more expensive than the puts, that essentially means that institutions are looking at a higher probability of the stock going up. And you can see all kinds of examples of that. That's obviously our most important timely and unique signal, I would say. And that social sentiment is just like the general chatter on, a variety of different platforms, social media platforms, where we're just trying to assess, the directionality and how strong social sentiment is and how it's trending. A lot of social sentiment metrics we'll look at just today, but we don't do that. We actually there's a very simple reason that we look at wider timescales, and I'm not going to give away our secret sauce too much. But if you see things with like light chatter, right? And you look and say, like, even like 2 weeks ago, someone was saying bad things about a stock. Instead of treating them the same, I would rather the one that had more powerful bad signaling 2 weeks ago, even if it is a little old, over the one that like treating them equal, they just have like slightly bad chatter or slightly good chatter. Now, institutional flow is more looking at the mainly equity purchases. But the interesting thing about like any institutional flow metric is it goes off 13F filings, which the best case scenario, you're getting data that's 6 weeks old. So it is a little bit sometimes what institutions want you to see as opposed to what they have, which is why I lean on net options more, especially because that's more truthful in my estimation and most importantly, timely. Net option sentiment, upside breakout and downside breakout all refresh every 3 minutes. Whereas you're looking at something like 13Fs, that's once a quarter you're getting update on the positions. There's also these things called 13Gs that if a company, if a fund owns more than 5% of a stock, they have to report on that immediately, and that's more timely than a 13F. However, those don't report on every stock, and that's more sparse. So there is some timeliness to it, but it isn't as timely, certainly, as net option sentiment. Dark pool rating is essentially one of the things that we do is sometimes people look at the percent traded in the dark pool. What we do instead for that is we control for things like not only the percent traded in the dark pool, but the volume of shares traded, as well as the total shares outstanding and how much they're churning through that. Just because like a smaller stock can trade more heavily in the dark pool just because there's less shares traded, but that doesn't necessarily mean anything versus a higher volume and more share stock that's being traded heavily in the dark pool, or even above 50% is kind of a threshold that we find interesting for a large cap stock. And then short pressure rating is probably the hardest one to use because personally for shorts, I like it. A sweet spot for me is probably not at the top of the scale. I like maybe like 60, 70 short pressure rating if I'm going to pick a short, because I want to know there's institutions vested in it, in shorting the stock and have put money into it. However, if I see that get higher, I start to worry about a short squeeze, and I start to worry about retail piling in or other people piling in ever since the meme stock thing. And that's a real thing now. So that's a tricky one. And then, ideally you want lower short pressure for anything you want to go long, but realistically, any stock that's got big growth, big upside, there's going to be a certain number of people shorting it. So you're going to get a critical mass. Like even Tesla, I think I've never seen below 50 short pressure. And that's average. And that's just because you're going to have a lot of people speculating against it at any given time. So that's everything. And then it's kind of to look at, the short-term ones. We obviously really emphasize net option sentiment is the most important thing. Not only do I want to see that being high, but trending is super important. I would take a stock that is that was at 40 net option sentiment. It has like a steady climb, not a volatile climb. In the net option sentiment time glares, I take that above a stock that was at 40 and a steady climb to 60, above one that was at 80 and is down to 70, or even one that's like fixed at 65 and not moving. The momentum there is very important. Net social sentiment, I would say, is the next most important, but really net option sentiment is the big one. And I look at the other short ones as supporting factors. I don't want any of them to look bad along with that net option sentiment story. Similarly, like if I have a net option sentiment of 80, but a net social sentiment is 0, I probably won't touch that stock or anything below like 30 or 40 really. And then, you might look at the long-term ones, as I said. Like, I love to see net option sentiment that's like very high or climbing, and then you have upside breakout that's way higher than downside breakout. I would say anything where the upside breakout is 40 points higher than the downside breakout, that's very, very good, 40 points or more. And then I want to see high profitability and growth. And yeah, it's kind of the reverse. If I see something in the short-term signals that I like, I also want to make sure it looks good in the long-term signals before I make a decision point on that. Because I think that that's just a really, really good way to mitigate your risk.